Let's move along to the trade of the day if we can. And we're focusing on cable. Latest numbers have reinforced the view that the strong performance by the economy immediately after the Brexit vote a year ago hasn't been sustained into 2017. The pound reversed an earlier advance against the dollar after data show the UK economy extended its lackluster performance into the quarter through June with a 0.3% rise. Sell at 130.90 is the message here. Target 128.90. Stop loss 131.50, so that's just around or just above the recent highs, and then risk-reward ratio 3.33s. Ed, is that something you would countenance?
I think that sounds like a trade you're going to have to sit there for like a month. I don't see the volatility. Well, people are pushing the volatility in cable, and it's not showing it. It's like a bit of a dog at the moment, but a dog that's rather high, obviously above 130. It's interesting about cable. If you look at the longer-term chart and look what happened in Brexit, after it trashed, the high after the trash was 134.12. And the longer cable sits here, as the point I made earlier, the likelihood is it's going to grind higher. Everyone is trying to force this baby, and it's going to be 129.30, 131, 129.30, 132.50, 129.30, and I think that's the story for the next month.
So the low volatility for you is actually a sign that we could squeeze higher, basically.
Yeah, it's a sign we can squeeze higher. It's also a sign that it's not going to be sustained. So it's like, don't force it. It is trade that range. So that trade is, in principle, it's right, but it's looking for too much volatility that I don't think is there. And it'll just work its way higher. And at some point, probably in like 2 months' time, people will say, well, isn't it bid 134? And then it will turn as the market's given up trying to sell it, given up trying to force it, thinks it's going higher, and that's when it'll come back down.